GKFX Prime presents the Market Analysis Webinar.
Hello everybody and welcome to another edition of the weekly webinar. Introducing the RSI indicator this week as an extra technical analysis tool. I'll explain as I go along, but any questions, drop a comment in the video. That's always very welcome, or just contact customer support. As far as the week goes, the big one is going to be the FOMC on Wednesday. The Federal Reserve obviously deciding interest rates. Clearly they're not going to actually move interest rates, but they might hint at cutting back on their asset purchases, as was discussed in the week ahead video this week, if you haven't caught that yet. So quite likely there's going to be a somewhat slow market in expectation of the Fed, but that said, we're actually already seeing some decent moves down as of Friday in the major currency pairs and in gold, and a decent bounce in Bitcoin over the weekend. So maybe the volatility is still possible before this Fed meeting, but it's going to be a big one. We'll have an idea whether the stimulus from the central bank is still going to be in play for a while yet, or whether it's whether it's on the road to closing. Right, let's get on with the technical analysis. Let's start with the euro-dollar pair here. So I think this is the way that I'm looking at this is that we've got the moving average on the chart here. This is roughly speaking, it's 100. It's the 120 period moving average on the 4-hour chart, which pretty well equates to the 20 period moving average on the daily chart. And you can see the trend has been pretty well respected, but as of late we've basically rolled over and dropped below that daily 20 DMA. And you can see also at the same time, while the market's uptrending, it tends to respect the 30 level on the RSI, so it doesn't go oversold when you're in an uptrend. And as you can see, as of late, it's just dipped right down to that 30 level. And so it's just nudged into oversold territory, which tells us sometimes that actually a bit of a change of trend is in foot. And we can actually see a bit more evidence of that happening. So the first time that we actually hit this oversold level was here. And then what you want to see after that, if the uptrend is going to maintain, is you want to see the RSI take out the previous high. You want to see the price take out the previous high. So this is the equivalent low. Price rallied up, but you can see it basically failed at this supply zone here, right? And then the price has dropped right back down. So rather than breaking out above this peak here and the equivalent one in price, and in indeed the 122.50 level, which was basically the top, instead of breaking out over there after reaching an oversold level, it's stumbled and it's come back down to the oversold level again. So with all that, given the failure this time around, given the failure to really kind of break out of this declining channel, I suspect we could be in for a deeper correction here, i.e. the trend has reversed for the time being. And so one potential area where the price could roll over is these previous lows through here, which was support, and we recently broke down through it, and it could turn into resistance. And that's around 121.40, 121.50 is obviously kind of the round number involved there. And if we are to take out this demand zone here, which has to some extent worked so far, then the next level would be this low down here, which pretty much equates to the 50% Fibonacci retracement of this whole rally. So potentially we're in for the euro pulling back 50% of this rally, and then from there we have to judge the situation. It will be in a kind of downtrending situation at that point. We'll have to see whether we can see a reversal of this process, hit an overbought level, and then see if we can move on from there. So I think this is an uptrend which is rolling over. And as I said before, any reason for me to think otherwise would be if we basically took out these highs on the RSI, took out these highs here, where the price fell back down and broke out, and then we'd be looking for pullbacks again. But for the time being, I think it's more of a sell the rip than buy the dip. Now the pound, on the other hand, is looking a lot stronger and has not hit, you can see on the RSI, has not hit an oversold level. But it's also not hit an overbought level for a while, and you can see also the price has just been contained inside this kind of little downsloping, in effect sideways, pretty tight sideways range. I've got 142 drawn in there, but basically it's 141 to 142 is pretty much what we're dealing with here. So it's not clear which way it breaks. You know, if it breaks the same way as the euro, the way we suspect the euro is going, that would be a move to the downside. That would be obviously dollar strength. That would imply the Fed is a bit more hawkish than people are expecting if we were to see a downside break in these currency pairs. So, I mean, I think there's been so many opportunities in this channel to buy, sell, buy, sell, buy, sell. It's been a great range trading environment, but I don't think it can last much longer. I do think we need to see the breakout pretty soon. For the time being, we're uptrending. As far as RSI goes, we have taken out the 20-day moving average, which is a bit of a bearish sign from the moving average standpoint. And so let's see which way we finally break. I don't think this is probably one we want to try and anticipate it. Probably what ideally we want to be able to see is if there's not too much of a sharp move down, but if there's a bit of a move down out of the area, then you try and sell any bounces from there. Equally, if actually the whole result of this is positive, we kind of see a break to the top side, and then we'll try and buy any dips from there. Switching gears to the dollar yen, you can see the dollar yen has been, we hit oversold levels over here after that big decline, but since then we've held above, we've been in this kind of rough, choppy uptrend, and we've hit overbought a few times, but we haven't hit oversold. So for the time being, you can see that this demand area has worked a couple of times. The price has broken higher, but then it's got a bit choppy recently. We had a bit of a kind of top here as of Friday, and the price kind of struggling a little bit at this supply area. It'll be telling if we actually can get through here, if we can move up to the top side. Still, there's a potential selling opportunity at the highs here, but it'd be a good sign. It'd be a bullish sign for the dollar if we got up through here. It would indicate we can probably take out this area too and go and challenge these highs up here. And then again, on the flip side, why would we turn bearish? Well, it's probably going to just pretty much be this 35-ish zone in RSI. If we get a breakdown through there to an oversold level, and equally, there's a pretty clear kind of support through these lows here, roughly speaking, around kind of there. If we get another breakdown through here, 109 is a bit lower down here inside this demand zone down here. That would be our cue, I think. Down through the lows, down through 109 would tell us to start turning bearish and looking to sell bounces. Right, moving out of currencies and into precious metals. So this is gold, and you can see similar sort of situation to the euro, where we've been holding above, oversold for a long time. We're above the moving average. I think what we've got here, the 200. We can change it to a 120 and see if that changes our picture a little bit. Here you can see we're pretty neatly holding on to the 200-day moving average, right? That was when we had our first drop through the 20 DMA. Also when we got oversold. And so then again, what you want to see after you get this getting oversold in an uptrend is potentially a buying opportunity. And obviously you'd see the price did bounce from there. People bought the oversold dip, but we were not able to take out the the highs. We even had like a kind of declining trend line through here, which we sort of false break off, and then we've turned down again. But more simply, just looking at the previous highs and lows, we got a bit of a breakthrough here, but we basically stalled at the 1900 level, right? And we'd never got back to this preceding high before the drop. So we got the drop through the 20 DMA. What you basically want to see after that is, okay, depending on your trading strategy, you're either buying that oversold dip, but those who are buying it are probably not buying it up to new highs. They're catching that oversold area, and they're buying it back into kind of more normal zones. And you can see they're kind of take profiting in here after that initial dip buying. And really what you want to see from my perspective after that oversold dip is you want to see that the highs getting taken out to confirm that, okay, that was just, the market got oversold, it's over it, and the uptrend's resuming. But we didn't see that. We can see that we've basically stalled and we've turned lower, made new lower lows here. And we're testing this previous low, and this is our demand zone through here, and it looks a bit ominous at the moment. I mean, this potentially is a buying opportunity here at 1850, but the price has already failed to make a new high back there again. It's certainly 1850 certainly could hold, but it looks to me like we're rolling over. We're into oversold territory again, and we're in more of a downtrending period for the time being. I think it doesn't have to be a heavy downtrend, but I think the impetus is more on the selling. And so if that's the case, I think there could be opportunities through this little supply area up here where the market paused. It's around 1875. If we get a rip through there, that would be very bullish for gold, I think. That would mean we basically held the low, got through the supply area, and we're pushing up into the highs again. That would be so. If you were looking to sell gold into there, but it didn't pan out, I think that'd be a reason to flip positive and look for a break to new highs. But potentially, this is if we do get a bounce and the price doesn't just fall off a cliff, that could be an interesting area. That 1875. Okay, so on to precious metal number 2. We're in silver now. It's been a very sideways market, but you can see it's coming. The sideways market has come after a long period of it being bullish. So we've been above this moving average for a while, and you can see only as of late we dropped through it, went oversold on the RSI, and then we've tried to make it back up again. Here was the high before we had the dip into oversold, and you can see the price, there's the equivalent high there, and we've rolled over from it. So if we do manage to if we turn around and we end up closing up through this high, that'd be a bullish sign for me. Could be a clue that we're getting up through and above 29 potentially, back up to testing that 30 level. But for the time being, after this drop into oversold and after the failure at the high here, to me, again, my suspicion is that the break below the moving average, the move into the oversold, the failure at the bounce, all points towards the price rolling over a bit. And if it does so, here's our next kind of major level, which has already been, it's from here, it held again 27. You'd at least expect to have another test of 27. And that would be our kind of horizontal support area. Then you'd be looking down to 2650, potentially just this former support area down here, which is more like 26. By far the strongest market at the moment is WTI crude. You can see here, this is certainly the mark of a strong market. And this is an example of what we kind of want to see, right? Is where the market had been going sideways. It'd basically been contained inside like a price range was roughly kind of this, right? Where these lows, okay, they hadn't quite come down and tested the bottom of the range, but it was something along these lines, right? This low, that was the high, and it's going sideways. And you saw that we had the drop through here, went oversold, was pretty choppy through there. We had that bounce and everything. Bit hard to trade this. Looked like things were turning bearish, right? Then you look to sell the first supply area, but the price moves higher. So that's a bullish sign. price moves all the way up to the next kind of bearish area up here. It does hover around there for a while, but it can't sell off. It doesn't take out these short-term lows and actually breaks to the top side. And then so that's when our oversold level has been resolved. We've broken to the top side, and you can see the strength of the market since that's happened has been very good. And so if you just bought the breakout, knowing that we've come off this oversold level and that the market's strong, you know, you bought the breakout and you've basically ridden out $5 or so, good number of percentage points in oil since. And we're up at multi-year highs at this point, no particular trading opportunities, but I think if we do pull back, you know, it's classic uptrend stuff. If we pull back to these highs, after the first test, we already did it a bit, but maybe a safe area under 70 will be this little demand zone here. And then this one's already been tested a couple of times, but that could work again. That's around 68.50-ish. And by the way, just talking about the RSI again, if I go back to that oil chart, just to say that if we drop below this is like the sort of roughly the 50 in the RSI. If we drop below there, it would just tell us that the pace of the uptrend has changed. So we'd be more into a kind of choppier uptrend, potentially something more like this, rather than a very tight range underneath the overbought area between say 50 and 70, showing this kind of tight sustained uptrend rather than a more wavier uptrend. So it would only be when we go oversold that we get worried about the uptrend. Down below here, likely there would be buying opportunities under this 50 level, above the 30 level, if you're waiting for those kind of bigger dips. Right, moving swiftly on to the S&P 500. So again, another example actually. Potentially, it's not completely resolved, but it looks pretty okay, is that we'd been uptrending for a while. Look at how strong the market was there, literally held above the 70 level in the RSI, and you can see how tight that uptrend was. Eventually, we kind of did break lower, but it was still well above oversold territory, so people bought the bounce, and then eventually we had this pretty sharp sell-off in mid-May, dropped below the 20 DMA, went oversold, but the market bounced substantially. Then it dropped substantially again, bounced straight off the 30 area. In terms of obviously intraday it was likely below 30, but then by the time the market closed, like this candlestick, it held above it and basically just touched the oversold level and rallied up again. And then this is an example where we took out the RSI highs and we were also able to break out above the from where we weren't oversold that second time, right? So now we've the market's been generally bullish. It's held on to the 20 DMA, and we've now broken out above where we had the initial dive from a record high, a dive down into oversold. So now we're really in the important area here, where if we get a clean break of 4250 where we currently sit, we've overcome the oversold drop, the big drop, and we've broken out to the top side, and that would be a cue for a very strong rally up beyond 4250, and moving up to test the next round numbers 4300, etc. This is not completely done yet, in my opinion, and if we do get a drop down through here and take out this little short-term area of demand, which, if you prefer, it's just a support level. If we fail to break through here, drop through the support, to me that would be pretty bearish, and I think that's when we're staring at a double top type situation. Right, last but not least, because it's actually looking pretty interesting right now, is Bitcoin. So here you can see obviously Bitcoin just dived. I mean, this is just a full-on crash by any other market standard, more of a dip by Bitcoin standards. But we did come down substantially from the 60 level, basically cut in half in a few days, obviously, as we all know, down to the 30 level. That, for the time being, has been the bottom. And so we hit oversold at several times. The market was obviously, from when it first dipped into oversold back here, We did manage to get back into overbought. I mean, it's a very volatile market, but we were oversold several times. We've been oversold again recently, and all since that overbought period, we've been under the 70 level. But as of now, as of this last weekend, it looks like we've broken back above this declining trend line, and we're now testing this supply area, and we're testing the 40 level, and we're trying to see if we can hold above this break. So then that will be a situation where actually I think these don't work for some reason too well, and there you go. We went oversold, and we've gradually made our way back, even oversold again. And here you can see we're trying to take out that high from when we were last oversold. So maybe this last one is probably the more significant one. Here we've taken out the RSI high, and the price is trying to take out the equivalent price high here, and it pretty much corresponds to the 40 level in this supply area. So putting that all together, that will be nice and bullish for the market if we can close above this area. And then you don't necessarily want to buy right at that breakout, although you can. But after that event happens, that's what makes you think, okay, I generally want to be a buyer, and then you're looking for buying opportunities, however you look to do that. Okay, that's it. Thank you very much for watching this week. I hope that was interesting, and good luck trading this week. And please subscribe to the channel, click the like button if you enjoyed the video, and see you at the same time next week.